So on the S&Ps, naturally, this is a pretty big down candle. Give me one sec here. All right. All right. So it's a pretty big down week. We were looking for the pullback. We got it. Made pretty good trades because I did end up selling calls up in here and it finally rolled over. So those trades worked out good. But I mean, it's been going down for 3 straight weeks. This is a pretty big down week here. It's actually the biggest down week that we've seen in a while, probably since September. So it's a pretty big down week, but that's the level that I'm kind of watching. And if we go over to the actual S&P 500, you can see yesterday we closed pretty much right on the daily or the weekly expected move low. So literally this was the closing candle yesterday. So you closed like right there. So today we've opened up and we're pushing lower. We could be looking to run these lows and then find some support. If that happens, I'm going to look to sell a call. I mean, a put. Sorry, not a call. But it's going to be, just to try to get back small piece of what I lost yesterday. That's if it holds. That's only if it holds at support. So essentially, if it takes out this low and then continues to make lower lows and lower highs, then obviously I'm not going to. So yeah, there's that. Running over here to the daily time frame, you can see that, yesterday was a pretty big down day. We did have Fed Powell speech at 1 o'clock. I was unable to listen to it because my internet has literally been so bad the last few days. So I don't know what's up with that. I'm gonna have to give him a call today. But anyways, we may not even take out yesterday's low. But this is definitely an area where I would expect it to bounce. Seeing how there's Monday, Tuesday was a very small inside day. Then Wednesday, yesterday, we had a pretty big drop. But you can see last week we held within the day or the weekly expected range there. We held within the weekly expected range here. And we held here and here. So you can see since the bull market's basically been in full swing, the lower expected moves have been the play to short puts or to buy long dated calls. It's up to you. Longer dated calls are going to be more expensive. If you were to buy long dated calls, I would probably go out at least 44 days. Yeah, and they're super expensive. Um, yeah, right in the money call is going to cost you about $500. So we may do that instead of selling a put because it's an unlimited profit potential. So if it does hold a support here and we do get a push higher, obviously being in a long dated call, you're not going to lose but about $1 a day in theta decay. And we have a pretty high implied volatility because the VIX is at $18. But the VIX has had 2 red days in a row. There's that. If we go look at Bitcoin, it's basically just doing the same thing. It's pulling back. It's trying to take out this range low here. So if you're looking for shorts on Bitcoin, you could potentially watch up in this area here. Forget about that 1 hour level. That's going to be daily support. So watch daily support, see if it holds as resistance. And then tomorrow is the halving. So I do like it as far as the structure. It does look still bullish to me. Let's see what we've done here on the daily with the moving averages. If. There we go. Yeah, we've lost the 50 on the daily. I mean, on the EMA, we've lost the 50. We've also lost the 50 on the RSI on the daily. On the weekly, let's see where we are with the 21 exponential. Oh, we're way down here. So Bitcoin could still go down as low as $54,000. It's almost 55K. I don't think you're going to get there this week. Maybe next week you push down into it. I don't know. We'll see how it plays out. But, you know, it could hold support here as well. I mean, there's nothing that says that it has to roll over. So just, you know, if you're trying to trade it day trade wise, you know what to look for. You know how to manage your risk and all of that stuff. Make sure you're doing that. Let's go look at the TLT as it's down again today. It is bouncing off of that monthly supply zone, but you can see the bounce was not very high. You did manage to get a $1 move out of it if you were able to enter basically right on monthly supply. I mean, demand, sorry. There's the monthly demand right there. You can see that it did bounce perfectly from that level. So that would have been a decent little trade. I just didn't take it because this thing was just free falling. And it still kind of is. I mean, if anything, you could call this a relief bounce. But this relief bounce is also another reason why I'm kind of looking for the S&P 500 to have like a day or 1 or 2 day relief bounce. So right now, we could probably go ahead and buy a call at the money and see how it turns out. So basically what I'm going to do here, as you can see, I got this one working. Let me close it. I want to buy this. I want to buy it at the midpoint, please. It moves very fast. Let's see if I get filled. Right now, the spreads are pretty wide, too. But I like this route better for a 2-day bounce, and then I could make back what I lost yesterday on that put. Like I said, I ended up leaving, so I wasn't paying attention to it. I didn't have a stop loss set or anything like that. I just literally, okay, so we're filled on the call. It's probably a little bit early to do that because we did not take out that low. But we are playing it. This is a very big level. It's that weekly res level, and it is also the lower edge of the weekly expected move. So I would love to see a bounce from here. I love the fact that the first, 10 minutes of the market, it just kind of sold off, making people think that, you're going to see similar price action as to what you've seen all week. Just be basically open and then go down. That's literally what the market's been doing pretty much all week. So we'll see if it can actually go up today. Would be fantastic. Make that money back. I would be extremely happy with that. Tesla's not having a good day as it broke down under the trend line support that we got there. So obviously, I do think at some point Tesla is going to be a buy. It's just at what price are people going to get involved? You're at 150 right now. That is a big figure number. 150. Seeing how the yearly opening range is 250, you're $100 off of that target. So that would be what? A 75% return. Just 50 something percent chance return just on a retest of a yearly opening range. You do have earnings coming up, and they did lay off like 13,000 employees. That number might not be absolutely correct, but I do know that it's more than 10,000. So that, obviously the market took that as bad news, but ultimately investors may take that as good news, as people like to buy companies that make money. And obviously by laying off tens of thousands of employees, even though, it's bad for the company to do it as far as getting deliveries made and production, but it does increase the bottom line. And the bottom line is essentially what investors are looking at. Are you improving your bottom line profitability? And by laying off 10,000 people, you're definitely going to make more money because you're not having to pay those people. So whatever profits you were already making, just go ahead and chalk 10,000 worth of payroll and add it to the profits or the bottom line. So people could potentially start to look to get involved here. Now, what I would probably wait for is to see if this ends up being a daily bull, like a daily bear flag or a bear trap. Sorry, can't get my words straight this morning. Got too much stuff going on. See if this would be like a bull trap, a bear trap, not a bull trap, a bear trap. We want to see if basically this occurs. We want to see if this thing closes back above here today, or if we close on the lows, like somewhere down here, does tomorrow end up being a big bullish engulfing, right? If that happens, then we can assume that most people were buying today instead of selling. Unfortunately, the skew is still up, and let's see where it is exactly. Man, it's ever slightly, ever so slightly getting lower and lower and lower. I would love for it to get back under that 130. But, when the skew is high, that means people are still selling calls and buying puts. So that makes trying to put a put spread or a call spread on impossible. Plus, you got earnings coming up next week. So you're going to be paying a very expensive IV. Why is this important? It's simple. When the IV's jacked up that much, it literally means that you're paying extra premium. See, like just this week, one day you're still at a high 60 implied volatility. So it's going to be hard to build a spread. You would have to go out far to get the IV closer to 50%. But this is too far that the skew is going to be against you. And even if you go 36 days out, the skew is still against you. So what I mean by that is the IV is going lower. It's getting lower the further out you go. In order to buy a spread, you want the IV going up. So you say we buy the 62 IV, we would want to sell like a 64 IV, as that would help pay for the trade. So like if I put this on like this and say do something like that, you can see you're going to pay $2.65 to get into this trade, and the max profit you can make is $2.35. That's not good for a $5 wide spread. I don't want it to be more than $1.75. So whenever it's more than $1.75, I don't take it. You know what I'm saying? So that's why there hasn't been a lot of trades. That's the reason why right there. Now you can go in lower and even just going out 22 days, you still got a $5 wide spread. You could go do dollar wide spreads and just, try to make a couple bucks, but you're still paying $1.70 for a max profit of $1.80. It's not good. It's not good at all. Generally, if I do a dollar wide spread, I want to only pay 30 cents for it. So that way the most money I could make would be 70 cents. You see what I'm saying? Then you could buy like 3 of them or something like that. pay 90 cents for a potential to make 215 or 210, something like that. So that's what we'd typically be looking for. But since the skew's all jacked up, it's been making us buying long options trades difficult, especially on the fast movers like Tesla and any major tech company, Nvidia, all of them. They're all really fast moving things. Now we're having a down day on Microsoft, which is not going to help the S&P 500 at all go up. Apple is the second largest company inside of the S&P 500. Microsoft is the first largest. So this is how it goes inside of the S&P 500. Microsoft is your biggest company, then Apple, then Nvidia, Amazon, Google, Meta, Tesla, Netflix, so on and so forth. Oh, yuck. Sorry. Blinded everybody. Myself included. I'm staring at 5 screens. I just killed my eyes. Give me a second. All right, so anyways, that's basically what we're looking at. We need Apple, Microsoft, and these things to kind of bounce. What was that? A duck. I heard a duck. Anyways, in my headphones. Nvidia looks good. It's made a fresh low. It took out this day's low here. And it's bouncing. That's pretty good. That's what you want to see. This does look like a bull flag accumulation formation, which is insane to me because this thing is so massively overbought on the weekly, not on the daily, but on the weekly. You're still well overbought. So it's insane the growth this company has seen in the last 2 years. Well, let's say 2023 and Q1 2024, the growth this thing has seen in 5 quarters is insane. Absolutely insane. That's why a lot of people were calling this a bubble based on Nvidia. And it's just not, right? Nvidia was at the right place at the right time to be able to capitalize off of the AI craze. But we didn't see a bunch of AI IPOs, which means we're not in a bubble. So yeah, if we could let's go look at some of the sectors. The sectors is looking good. XLK's down. XLF finally getting a bounce after finding support here at daily support. This is where we were looking for a bounce. We're finally getting it today. So that could literally help the S&Ps. And if energy were to rebound a little bit, that would help the S&Ps as well. Retail's doing okay, but they got absolutely slammed. I really wish I would have bought a put on this because this moved like freaking $10. That would have been a freaking home run trade. Consumer discretionary not doing so good, but it's got 2 levels of support here, 170, 235, and 170. Materials, no, where's home builders? Home builders are up 1.16% today. That could also help the S&Ps. So I would love to see that bounce happen today. No, Carl, you didn't interrupt the recording. I didn't start recording until after you turned your mute on. You're good, bro. Don't worry about it. Even if you did get in the recording, I can just simply edit you out. Unless it's a good question. And if it's like a question I think the audience on the general YouTube channel would be interested in, obviously I wouldn't edit it out. But I would definitely make sure that you knew that your voice would be on YouTube. And if you weren't cool with it, it's nothing to edit it out. I have the best editing software known to mankind. All right, so Yeah, that's just basically what we're looking at. There's really no individual stocks that I'm watching currently right now for a trade. I am interested in this Pan W if it can, which is Palo Alto Networks, if it can hold support, and it looks like it is trying to. We really should have got into a position on this thing at 264. If we could have got in at 264, we would already be out of that trade, and that would have been a big one too. But the same thing goes with, with the skew and the call spreads and everything. And you definitely got to use the call spread on this because the options are so expensive. It moves so fast. Like in one day, you could get stopped out with a one. You could definitely lose 1% with just one call easily in a day. It moves multiple dollars per day. But, Nancy Pelosi owns this stock, or she owns call options on it like a year out. But she bought it in this area here, so she's not in the money yet. Unless she took her profits up here, which is highly undoubted. If she's expecting this thing to move like Nvidia or something like that, that's why she bought it. And obviously she would know. Or not know, but she would have a good idea. And a lot of these other ones, they just fell through. The AU, which is a gold trade, and the AEM are both gold miners. But these are potential trades if they find support. It looks like AEM already found support, but gold has pretty much run already. So, I mean, I made money in this move. I essentially got in gold here as it broke back above the yearly opening range, but the yearly opening region, but I didn't get in on gold. I got in on AEM and on AU. I bought them both at the close of the day and closed out AEM faster, which in hindsight, that would have been the one to hang on to, as it was a bigger mover than AU. But I was in it for so long, I was starting to lose, quite a bit of money on the theta decay. That's the problem with buying options. The problem with buying options is that they have an expiration date. And each day that passes, the closer and closer you get to that expiration, the more money you lose. Even if it's in the money, you still lose that $1 a day. It's priced in already. It's already priced into the premium. So that's why we don't look to buy anything over 50% with an implied volatility over 50%, I should say. And then Forex really missed the move, the real big move last week on euro dollar. Really missed it. I was looking for that move to happen, but I was just a day or two too early. 2 days too early, really. A tagged monthly supply and then rolled right over. That would have been the trade. Instead of looking at it to fail here at a daily level, I should have put more emphasis on waiting to see if it went up and tested the bigger level, which would have obviously been monthly supply. And then I'll show you that monthly supply right here. So you can see you tested that perfectly and then just dropped. Boom. And you're back under the March open. So yeah, that's kind of what we were looking for. But like I said, just missed it by a couple days. Just got in too early. Pound dollar, same thing. But it actually didn't really give us a decent entry. USD JPY is still rocking and rolling after the breakout here. It's only a matter of time before, the BOJ intervenes. But at the same time, you're not going to know it until after. They're not going to come out and say, yeah, we're going to intervene, as that would give everybody an opportunity to get short. They're just going to do it, and then you'll see it in the price action, and then we'll look for retracements to get short. Because you're going to get a retracement. Nothing moves in a straight line, right? This was when they intervened. You had an opportunity the very next day to get short this. If you missed this, right, you would have been watching daily supply, and that would have probably been close enough. You probably could have found a 4 hour or a 1 hour resistance level close to there to intervene. So that's that. I would leave that alone until they intervene. USD CAD, we were looking for the breakout here. There it is. Missed it as well. Probably could have got in on that day there, but after it broke support here and then made this move up, we really should have been trying to get in on this. But like it's very hard for me to watch every single thing, even though I have all these monitors and stuff. There's just too many things to look at. And basically this blue list here, this is the entire S&P 500. I've been literally going through, this is 500 stocks here. I've literally just been going through these every single day, trying to find a trade to get into. And I just haven't found one yet. So I continuously look. When I find something that I like, obviously I will put it in there. I really like Tesla. I really do. I think Tesla, we got to keep this on watch. Tomorrow will be the cue for us. If it makes a bullish breakout, like a big strong bullish candle tomorrow or even Monday, then even though earnings is really close, we still may jump into that because that would be indicative of bulls buying this instead of bears selling it. Now, obviously, you guys are breakout traders who are going to be looking to sell it, but you can see a pile of sellers coming in down here, right? This is like a perfect scenario for a big upside move. Literally, all this sell side liquidity can be getting literally bought into right now as we speak. But we won't know that until we actually see the results from it. Could you go ahead and buy a few shares of it and put no leverage on it? Yes, absolutely. I think this is a pretty good spot to put on a few shares for long-term holds and then just keep, continue to basically buy if it continues to go lower. But don't buy like every day, just buy like every $25. Because eventually I think Tesla is going to get bought. It's a good company. They've been doing good. But like I said, we can't see into the future. It would make things much nicer if we could. But we can't. S&P 500 turned back to positive on the day, which is pretty good. But it is struggling around this resistance here. So I would love to see this. This actually looks like we're going to see another leg lower. So the good thing about trading the micro futures contracts, like if you have a small portfolio and you're trying to trade options, the beauty of trading this product is you can get in and out as many times as you want in a day, and it doesn't count as a day trade. That is so stupid. It does with the stocks, but with this, which is a futures contract, even with the small account, you can trade it multiple times per day. So it's really easy to watch your risk there, right? So if this does ultimately roll over and start making fresh lows, I will jump out, ultimately wait for it to take this low out, and then see how it reacts after that. But I think that's what everybody would be looking for at this point. So, I mean, if the buyers are going to step up, I think they're going to step up here. And also, we've spent several days under the 50 exponential moving average. You got to keep that in mind too. Several days. I don't like the fact that it is starting to roll over, but you will see this from time to time. Well, investors will start to buy around the 50. And then, I mean, this was just a massive bull market when it couldn't even get under the 21. So now everybody thinks we're back in a bear market, but you're not. Here you were under the 50 for what, 1, 2, 3 days. You put in this day here, and then look what you did there. This is what we're looking for here, right? Just something like this. And then we can exit that position, and it will be a large profitable trade, a huge trade actually, if we were able to get back above the 50, considering that we pretty much bought at this white line. So if we did something similar to that, you're looking at almost 100-point move. That's a huge trade. Even on a micro contract, that will be a few $100s. Easy if it were to get up there. So we'll see. We're already in the position. You can see right here, we're already in the position. So we'll just leave that on, and I'll make sure to watch it. I won't let it get out of hand like I did yesterday. I'm not going anywhere today. So I will monitor this daily candle very closely. Do you guys know how to ask questions via the chat? If you go up to where it says Trade Talk Bar and Grill, there's a little open chat window there. It looks like the last time anybody ever used it was back in January. So if you got a question, you can ask me in there. I'll go ahead and type what's up in there today, April 18th. Yeah, we'll do more of these because it does seem as if though it's working okay. I mean, I'm looking at it right now, and it's holding at 60 frames per second at 1080p. So I don't understand why it doesn't do good on YouTube, but does okay on Discord. So whatever. But who is Ray? Ray comes and goes, dude. He comes and goes. He's a moderator in the chat. He comes and goes. Usually if there's like a lot of stuff happening, you'll see Ray around. The chat's been pretty dead lately because they're just, you know what I mean? As far as like, I mean, Bitcoin's already made a huge move, and a lot of the people missed the opportunity, obviously. They didn't buy when I said it was probably a good time to buy. They just missed it. They even missed the 2024 consolidation. The yearly opening range and then consolidation above it. Like, even though this was still very expensive, this was like where I was either going to be bearish or bullish. As long as we're above it, I'm bullish. If we get below it and take out this low, then I would switch my bias. But it just held support there for about 7 days, and then boom, took off. So, everybody's quiet now. But this is a consolidation formation, right? This is a consolidation formation. Just because it's a wide range does not mean that this is, this isn't good. There was an opportunity to get long today, but it would have been a breakout trade. It didn't really, early morning, like around 4:00, you could have got long. Around the London session, there was an opportunity to buy it. And then you would have gotten in around the low of the day. But, since 7, there really hasn't been an opportunity to get in. But it's running ready up right up to that level where I said earlier on, if you were looking for shorts, this would probably be the place to look. I'm not going to short it here because it's at the bottom of the range. Now, if it fails to close an hourly above this level for 2 or 3 hours, like 1, 2 o'clock, you've still not been able to close an hourly above that, then I might take a swing at it. But I would only be looking for a move like back down to 61. back down to this area here. Right? I wouldn't be looking for a fresh low or nothing like that. USD CHF. Yeah, we can look at it. Not at the moment. I mean, we could potentially look for DXY shorts, but I mean, this is a bullish chart. This is your yearly opening range down here. And it's just been straight up ever since, right? So the play would probably be looking for it to pull into a support area and then look to get long. But ultimately, if the dollar decides it to pull back, it could be a day trade short, and that entry could be, right close to where it currently is. Like you're retesting the open. If it is going to, close down on the day, this would be a decent entry spot. It doesn't look like a good entry spot because it took out intraday resistance. But if it is going to be a pullback day, if it is going to be a down day, you definitely want to get in around the open, as close to the open as possible. And that's the open right there. So you can watch it today for a potential entry for a day trade, and you would just be looking for it to get back down to around 90,858, which would just be, the intraday support that was made there. And there's definitely some interest there. You can see we had a wick through, close above, wick down, close above. It's definitely an area of interest. So if you are looking for a short, watch this price right here. You could look for a wick back up to resistance, short it, high of day, put your stop. And then, if it rolls over, you'll be good. If it doesn't, you'll get stopped out. But I would like to see the dollar roll over. The thing is the dollar's actually green on the day. Or in this case, white, but it could fail at supply. Who knows? I'll leave that level there. That's a pretty good level. It could fail at supply. We'll see. That's what we actually would need for the S&P to kind of have an up day for our S&P, swing trade. And it could end up being more than a swing trade. Right? This could be like as low as it goes and eventually climbs its way back up to all-time highs. But in order for that to happen, we would need to see CPI come down. We'd need to see inflation start to head back lower again. That would help the market go back up. The reason we're pulling back right now, is there is a lot of things happening in the Middle East, but I think it's going to be resolved soon. I don't know. We'll see. I don't think it's going to spring off World War III, hopefully, anyways, which that would be good. But as long as CPI is stuck, as long as inflation is stuck, core PCE and core CPI, then look for the market to trade in a sideways range, which is good for us. We love two-sided trade, right? It could do that for a long time. And that would be the more likely scenario. I am not looking for a dump. I am not looking for that. There's nothing, absolutely nothing at all that tells me that I should be looking for the market to crash. Not yet. We're still inverted on the yield curves, guys. We don't really start to look for a significant market pullback until A, we get the uninverted yield curve. I don't know if uninverted is a word, but unless we get this, I mean, if you look at this thing on a monthly basis, there's your 0% line. You got to get above that in order to be no longer inverted. Look how long we've been inverted. There's only one other time in history or on this chart where it was worse, and that was back in the late 70s, early 80s. And that lasted for a period of 4 years. All right? But we did get just as bad as the 73. And we can tie this in with recession, with U.S. recessions. See there? Those are all your U.S. recessions. The green line marks when there was an actual recession. So recession here, recession there. Then we got out of a recession, but then another recession came right back just a year later. Then we were in a recession here, 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 here. So do you see something in common? Most of the time we get uninverted and we start to head higher before the recession is called. But we can go look at S&P 500 or compare the SPX, and you can see that it literally started to roll over once the rates started to climb. But it was still impossible to judge it because we're looking at a monthly time frame. So each candle represents a month in time. So it was 1, 2, 3, 4, 5, 6, 7, 8 months of uninversion, almost a full year before the S&P finally bit it. And then here, the market actually started to roll over before the uninversion happened. But this was the .com crash. This was a .com bubble. So it actually popped as we got inverted. So it's hard to use this to kind of judge when we're going to see a big move lower. But we did get a big move lower here on this inversion, but we're still very much uninverted. I mean, we're still very much inverted. So we got to keep that in mind. So, you know, for the meantime, though, for like the now, the here and now, this week, or what's left of it, next week, the week after, we're not looking for any major market crashes. Not yet. We still got time. But this indicator is very good at calling recessions, no doubt. So we shall see. We got a monthly supply here we can mark out on this and just kind of watch what that looks like. Yeah, we'll call it monthly supply. All right. So, I mean, even up to there would be a decent spot. I could close that trade out with no regards up there, especially if it acts as resistance, which it did, you know, yesterday and the day before. We'll see how it plays out. Old weekly res here. There's the breakout. Ooh, damn it. There's the breakout. Here's your first retest of it. So this is, so far, Really and truly, this is very normal, very normal price action. To come back and retest the breakout level is perfectly okay. So if the market is going to continue to stay range bound or continue to go back up again, then we should see it hold here. Obviously, if we close under this price today, then I'm going to be exiting that trade. All right, because we got in it right about there. So if we go up and then we end up coming back down at at the end of the day or whatever, I'll close it out. But if we close up and we close up good, decently, then I'll just leave it on and see how it plays out for the next couple days. See if it wants a retest of the monthly supply level. It didn't really show no signs of slowing down at this support. Maybe there it did a little bit, but we'll see. All right, guys, we're going to go ahead and wrap it up with that. I will edit this video and upload it to YouTube. So if you do have any questions, obviously hit me up in the comment section below. You guys have a fantastic rest of your day, and make sure you guys trade safe, trade smart, and as always, happy trading, everybody.